What I will show you in this video is something about time and price that a lot of people decided to keep it as a secret, but I'll give you everything on details today. You will know exactly when to expect a PD array to be filled, when to expect a liquidity sweep to happen, and some other stuff. Make sure to watch the whole video to understand the full concept. Let's get into more details. Now, what I will start with is an example using hindsight for sure, but we took this example or this trade actually on the Discord altogether. This was EU and it was a long position. Now, I want you to actually understand what was happening at this time. So what we had is a fair value gap, two bullish fair value gaps. One is here and the other is a little bit below. Now, we were not sure about which one is going to get filled. A lot of people were not sure. So some people were saying, okay, we're going to be going long from here, going up. Some people say, okay, we're going to wait for this one and then go up from here. How to have higher probability knowing which PD array is going to be filled using time. Now, this is 11 a.m., right? Usually, I only trade the London kill zone and I don't trade the New York kill zone much. And I was waiting for this fair value gap to be filled the next day. So playing the price action, we can see that now it's midnight, almost midnight. And what we see from here is, and I know this is going to be a low probability fair value gap, and you will know why. Now, the question here, what time did this fair value gap was created? What time? Exactly at 3:30. So the candle that, the second candle on the three candle pattern, the fair value gap is at 3:30 on the 90-minute time frame. Now, I'll tell you that you can actually use any time frame. It works on different time frames, but the one with the highest probability is 90 minutes. And why? Because we have the 90-minute cycles, right? So every 90-minute candle is a cycle by itself. Now, when using this concept, we're going to focus on cycles, right? The 90-minute one. And then if we focus also on the daily, so if we're looking at the daily and we want to apply the same concepts, then we could look for the quarters of the day. So 4 quarters in the day. The same way when we're looking at one 90-minute cycle, when I look at the one previously at the same time, the same thing goes for the cycle. So if we were on the second quarter of the day, I would also look previously at the second quarter of the day. Now, I know you have some confusion about this, but now all the confusion is going to be cleared. So now, what time is this happening? 3:30. So what I was doing at this time is just writing here 3:30, right? Fair value gap. By knowing what time the fair value gap was created, I would be expecting the same. I would be expecting actually for price action to respect and react from the fair value gap at exactly the same time. 3:30 is when the fair value gap is created, and potentially there is a big possibility that the fair value gap is going to be respected, or at least price is going to come to this fair value gap again at 3:30. Because why? We now have fair value gap created at 3:30 90-minute cycle, and we're going to expect for price to come at exactly the same cycle. Okay, there you go. So what time is this? That's why I was not convinced to either go long, go short from here. I was only waiting for price, and I knew that after this candle, so this is 2 a.m. It ends here. This is the start of the 3 a.m. candles, 3:30. Our sponsor, Blue Guardian, is the only firm that gives you a tool to protect yourself from hitting your max daily lows and prevent you from overtrading. And it is very simple to use. They also have a new unlimited time evaluation with low profit targets and no trading days requirement, so you can get funded in the same day. Blue Guardian is a pro firm that I trust. Use the link in the description below and use the code MOLHAM to get 10% off your next Blue Guardian evaluation. I knew that price is going to come to this fair value gap exactly at this time if it wanted to go. Now, there is some time distortion sometimes, so it's not going to be exactly at 3:30, but this time it was exactly at 3:30. And you see price came what time? Again, 3:30, 3:30. And then what happened after? Simply price going up. Now, what I want to see simply by looking at this example, when we have a fair value gap, I'm expecting this fair value gap to hold or to be respected. When we have price come into that fair value gap and filling the fair value gap the same time when the fair value gap is created. Okay, so price is coming at the fair value gap at 3:30. If the fair value gap is also created at 3:30, then that means we have a big and high probability of price holding, right? Or this fair value gap holding the price to the upside. That is the time-based fair value gap. So we have a fair value gap that is created at a specific time, and when price comes at that specific time, when price action fill that fair value gap at that exact time, then that's a high probability one. I'll show you a lot of examples And this could be in different times. So a lot of the times, for example, if a fair value gap is created on the lender kill zone, I would expect price to respect this on the next lender kill zone. Why? Because now we have lender kill zone and lender kill zone. And if we refine it more, we can go deeply into the 90-minute cycle and know at what cycle. Exactly the same thing here. So we refined, this is actually 330, this is lender kill zone, right? And price came to it at what time? The next lender kill zone, 330. You see, lender kill zone, lender kill zone. Now, if we refine it more and want to know exactly when price is going to respect this or at least come to it, then it's going to be the 90-minute cycle. So we're going to know that, okay, 330, 330 again. That's the 90-minute cycle. And I'll show you a lot of other examples on how we always have the respect at the same 90-minute cycle. It's not always, but a lot of the time, if it aligns with your higher time frame analysis, if it aligns with your highs and lows and where you look for a liquidity sweep, if time is also aligning with this, then that's a higher probability one. Now, for example, let's start from here, from this price action, going all the way to the right and see how we can actually compare and how fair value gaps that are time-based could be actually respected on the same time. Now, first of all, the blue one, the blue zone is the Asian session. This is London, and the red one is the New York. Okay, that's the 90-minute cycle. Now we can see that starting from here, this is actually on London. What time does price respect this? You see, one time we got respected on this fair value gap, right? London, again, London, and another time, London. So you see how when we created this fair value gap on the lender kill zone, a lot of the time we would be respecting or at least expecting this fair value gap to be respected on a lender kill zone. Now, if we want to refine it more, then, for example, we can see that this is, again, 330. It's not going to be the exact time every time because there are a lot of factors that comes into the market, and it's not going to be perfect all the time. Market is not perfect. This is 330, right? And we can see that this is, again, 2 a.m. and 3:30. Displacement actually started after the 2 a.m. So price comes to that fair value gap at 2 a.m., then displacement start at 3:30. Now, one thing to notice here is also the liquidity sweep situation. So this is a liquidity level that was created on what? Slightly before the lender kill zone. So this is midnight or 12:30 a.m., right? 12:30 a.m. What time is the liquidity taken? So liquidity created at 12:30 a.m. and that's not random at all. When is it taken? Again, 12:30 a.m. Exactly the same here. And also, we have this order block because now the fair value gap is fully filled. We have this order block that was created at what? What time? Again, 2 a.m. We put it to the right. This liquidity is taken at 12:30, but still, price was still inside and filling that fair value gap, or actually the order block, this order block, at what time? Again, 2 a.m. So price respecting the order block that was created at 2 a.m., price doing a liquidity sweep at what time? 12:30 and 12:30. So you see how it's always aligning with each other. Now again, we pull this to the right. This is the fair value gap that is created at what time? 3:30. So that's the lender kill zone. Again, what time does price come to that PD array, which is the fair value gap? Again, 3:30. And it looks like there was some news here where price a little bit went above, but it was respected here. Now, going the same way, we had, for example, what time is this? This is New York, 8 a.m., where we created this fair value gap. If we draw this fair value gap, and you see how price was coming lower, going up. Now, when do you expect this fair value gap to be fully filled? A lot of people would say, oh, we're expecting this fair value gap to be filled in the lender kill zone. And that's wrong. Not every time this is going to happen. Maybe sometime, but not every time. But what happened here? Price did not fill this fair value gap until when? Literally, this fair value gap was created at 8 a.m., right? So if I draw a line here, 8 a.m., when is it filled? Exactly at 8 a.m. Literally. So you see, created here 8 a.m., respected at 8 a.m., and then going lower. Now, price came to that fair value gap on lender kill zone, gave a false move, but the real move started after what? 8 a.m. So it fully filled the fair value gap and it started going lower. So you see how this is really accurate. Now, the same thing goes here. For example, we have this low of the lender kill zone. Now, a lot of the time, when are we going to expect this low to be taken? Because we have no fair value gap here. So we might expect this low to be taken as a liquidity sweep. When do we expect it? First of all, on the same quarter of the day. So on the same kill zone. So this is the London kill zone. We expect this to be taken on the London kill zone. When is it taken? 2 a.m. on the London kill zone. When is it created? 2 a.m. You see how it's literally the same time again over and over? 2 a.m. created, 2 a.m. taken. Now, this is 9:30. There's some time distortion here, but also this level of liquidity, because this level, okay, it's taken. So this level and this one, a small difference between them. But again, this is on the New York kill zone. And when was it taken? New York kill zone. There you go. So you see how it's happening over and over. And a lot of the time, you'd be knowing when a PD array is respected, when it's the real respect of the PD array, when it's the false ones. For example, we have this fair value gap, and this time it worked, but it was not the accurate one. So you see, fair value gap that was created at 3:30 was respected at what? 2 a.m. Okay, I might take this one, but it's not going to be the real move. The real move, it's going to happen when price filled this at 3:30. But you see, price did not fill that at 3:30 and started going up. So that fair value gap did not hold much, right? Now again, a liquidity level that was created at 9:30. When is it taken? 8 a.m. Okay, so there's some time distortion again. It's not going to be always 100% accurate at the same time. Okay, now 2 a.m. again, 2 a.m. here. So we have this London high. It was taken on Asian session, but I know that this is not the real move. What happened after? Literally another sweep at what time? 2 a.m. That's the real move. That's how I want you to think about price action as of now. Time and price is always the same. It needs to be filled exactly when a fair value gap is created. It needs to be filled at the exact time when it was created. It doesn't happen always, but make sure to have this as a confluence in your trading plan. And that's how we expect this to happen, right? So this is 3:30, exactly at 3:30. Now I know that this is the right move and this is an accurate move, and it's going to be an explosive one. And you see, if we play the price action, what happened? Price literally going up, and it looks like this is 8 a.m. and this is again 8 a.m. So the real respect of the fair value gap again is happening at 8 a.m. and then we go lower from there. So again, it's happening over and over on the current price action. So now at the end, I think I already gave enough examples to ensure that you understand the concepts. But if you don't and you want to have a very short summary going over this, so what we need to see is a fair value gap to be created. And we're going to mark when is this fair value gap happening. First of all, at what kill zone and at what 90-minute cycle. And also, if this is happening on a manipulation cycle, then I want to see price coming into that fair value gap, or at least the real respect of that fair value gap is going to happen at the same kill zone and the same 90-minute cycle. If I have those two aligning with each other, basically time and price aligning with each other, I'd expect this fair value gap to be a higher probability one followed by an expansion. That's how we can actually connect and relate between time and price. This is the real way. Hopefully you guys find this video helpful, and I want you to apply this. Come to my Discord, discuss this with me. Every day we come to the chart, we discuss everything about the chart, and we look for the same stuff. So fair value gap created at a specific price at a specific time, we always mark those and wait for price to respect them. Hopefully this was insightful. Again, if you like this video, then make sure to hit the like button, subscribe, and leave a comment. I really like to see your comments and your suggestions. Okay, if you have a video recommendation, then feel free to do that. This is Molham, and I'll see you in the next video. Bye-bye.